Hello and good day everybody. Welcome to the 5th episode of Advanced Order Flow Trading course. I am JJ8. We are looking at our performance using the same method that I am teaching. As always, no backtesting, no offline chart. We go straight to the live market to execute and learn all together. We are looking at NASDAQ 1 minute chart. London start at 3 a.m. New York time. We had this big bullish run and now we are looking for a reversal or maybe a continuation. Looking at the bigger picture, we already see that we took all these highs and now currently we are having a dip in the market. First and foremost, I would like to add the volume profile from this pivot low to this pivot high, giving me the point of control right here at $860. For continuation, we can rely on $860 to go long on NASDAQ. To find a good entry point, we are required to study the candlesticks in this portion. We have one tail in here and we also broke above these highs with a gap. This gap has been slightly tested on this tail, making this gap as a breakout gap. Therefore, we can rely on this high until the price closes above this fair value gap or this liquidity void. Now the point of control has shifted to the highs. Over here, we can have a small window to scalp it. We can have a sell order. When the point of control shifts to the highs, it would provide us a decent opportunity to go short on NASDAQ and just have a quick scalp. This is a trading model that you want to memorize it. I immediately submitted a sell contract and targeting 1 to 1.5 or 150% of the range. Best practice is to try only maybe 1 to 1 and move the stop to break even very fast. Point of control is right here. The profit is taken. So let me go through this trade one more time. We have the point of control shifted to the highs. That means a ton of order has came in. I can also add the cumulative volume delta. The sell order also shows in the CVD on this green candle. That's the red one. The amount of sell has emerged. We only took one tiny scalp in this position or in this area. We can use the same high value area or the point of control to go short one more time and have a new scalp. Here we entered a new position. Stop goes above the highs. Now this time the profit is slightly more than the stop loss. Now this candle has entered a fair value gap in here. It only touched it. That's still bullish. It failed to close below it. The point of control, you guys can see it is increasing 112 contracts. So sellers are still insisting to push the price slightly lower. My eyes are also locked on this fair value gap. If this fair value gap holds and I see many tails inside it, we also have a bearish candle in here. This bearish candle, if it's going to be a bear trap and the price wants to go up higher, the price should not close below 50% and 25% or the lower portion. In that case, I can expect the price to make a new high because this is a new high. We have equal highs. They're very near each other. So let's examine this big bearish candle. 50% is here. Look, we are seeing tails in this portion. For me to check where the highest portion of the trade is, I am minimizing the area of the point of control. Still, it's at the highs. This bounce in the price, it tells me that yes, if I see another tail inside it, I would like to participate in a long order, leave my stop below this candle. Therefore, I must pick a price that is closer to 863. All these jagged areas above that high is telling us it's going to make a new high and we can participate in that long order. Let's leave one pending order in this portion. Stop is below this level. The value area low, which is slightly above half of this bearish candle, is also providing support. Now this candle that closed bullish, is filling the liquidity above these highs, and eventually there's a high probability for the price to break higher and make a new high. If that order is active, now I can move the stop below this low, make it $500, and as the profit, it should be at least $750. Let's make it 1 to 2, 200% return on this trade. This should be a good trade. It's a live market. As soon as we make a new high, I can move the stop to break even. The point of control should provide support now. Let's look at the behavior of the price above the point of control. It should act as support and push the price higher. Now, this bearish candle, or whoever sold in this candle, they're underwater. I can move the stop slightly higher. The profit is taken. As you guys can see on the left side, the value area high is constantly going higher. That could indicate we might have a consolidation or a bearish leg. The value area high of the day, this means the highest price buyers are willing to pay, and now currently it's at the highest. As the price goes higher, that means buyers are willing to buy or chase the price, which is not good. Usually in a situation like this, the market gets exhausted. If I want to go reversal and use that value area high technique, I need to see wicks. If I see wicks, that means we do have ending orders or passive sellers at the highs. After that, I need to see aggressive sellers, and aggressive sellers are big red candles. This high now happened with a fair value gap. For a continuation, we can use the same technique. We want to see if the price respects this fair value gap or not. If it inverts it, we can participate in a short order. If it constantly tails into it and make a consolidation like this, we can use the same technique to go long. If it closed below it, I can add sell limit orders at the upper portion of the chart. My margin doesn't allow to add more than 3, so let's do 2 contracts in the lower area, 1 contract in the higher area, and once they are active, I would like to move the stop above. Let's have a bigger look of the volume profile from this pivot low all the way to that pivot high. Okay, that trade is active. It was activated on this wick. Now let's move this stop above the current high at $960. That's $500. And as for the profit, let's target the same fair value gap because the price can potentially bounce from here, or at least take this low. We'll see 116 contracts is at the highs. That's also a good sign. Value area high of this range that I showed you from this pivot low to this pivot high is here. That means markets exhausted. They were not willing to pay more at the highs. That profit is taken. Now we have a low and a gap. If the price closes below this gap, we can expect the market to go lower. But however, if it takes this low and start bouncing, this high is no longer safe. Now let's monitor the price action in this portion. For that purpose, I would like to move the volume all the way here. The point of control still at the highs for the contracts. It should shift lower, or I should see more volumes coming here. We have a tail. That tail says us, yes, we have passive buyers, and now we have a ton of orders coming into the market. That's aggression. Fair value gap in here. Let's mark it. For a very bearish scenario, the price should not close above 50% of this bearish fair value gap. If it does, that means it can make a new high or even go higher. There we go. That gap is completely inverted. Aggressiveness is seen in the price. It even get to 50% with aggression. Can have the low risk entry here at the bottom. Once the order is active, stop goes below this tail. Since we are up by the day, no need to risk more than 1 contract. Now we can go easy on ourselves. That order is active. Stop goes below the current tail. You will see still at the highs. but look at the volume, it is increasing. You might want to say the price inverted this gap and it's invalidated, but remember the main one is here. This is the main gap and this is the main candle. We just had a liquidity sweep, that's it. And the market, to go higher, it always likes to run a few liquidity sweeps. This is a close above the fair value gap, still below 50% of this bull trap, but this shows buyer's aggression in the market. Therefore, I can add one more position to the mean threshold, keep the stop where it is. These are institution's footprint. 3 bullish candles closed above the fair value gap. The first one was not that strong, but as they are accumulating or placing more orders in the discount, now we have a full close. Have more confirmation. All I need is for the point of control with 4 contracts to shift to lower, and it already did. The point of control is still at the highs, but the volume is getting very thick at the lows. Now it officially closed above 50%. Maybe we can add one more in the mean threshold. If it returns, I would like to add one more here at half of these bull candles. Now it's time to set the profit. We can easily target 1 to 3 and be content with this trade. Point of control shifted to the middle, right here in the middle. The price is now above it. It just tapped into it. You saw this bearish candle just tapped into it, and immediately it bounced up. That's a very bullish signal. So let's move the TP. There you go, guys. We have it. We still own it. Let's look at our journal. So here's the current month. I did not trade much on this account. Here it's Tuesday, June 16. We closed with 6 trades, 100% win rate, $4,300. Not bad for a Tuesday. I hope you guys like this video. To have more contents like this and more passion tape reading and order flow strategies, please make sure you hit the like button and you subscribe to my channel. I will see you in episode 6.